Hey tech enthusiasts, welcome to the Tuesday edition of Tech Stocks Daily. I'm your host, diving into today's biggest NASDAQ movers. From Microsoft's jaw-dropping $60 billion buyback and juicy AI expansions to CrowdStrike's mixed bag of legal battles and high-stakes cybersecurity alliances. We'll also dig into Snowflake's intriguing stock plunge yet bullish revenue forecast and why Intapp's soaring performance makes it a must-watch. Whether you're a tech investor or just love market drama, stay tuned. Today's packed with insights you won't want to miss. Let's dive in. All right, tech enthusiasts, buckle up. Microsoft stock has been on quite the ride today, so let's dive into why everyone has been buzzing about them. First off, Microsoft announced it was raising its quarterly dividend by 10% to 83 cents per share. This might not sound like fireworks, but for shareholders, it's like finding an extra slice of cake at a party. The dividend is payable on December 12th to shareholders of record by November 21st. That's some serious holiday cheer coming their way. But wait, there's more. The plot thickens with a substantial stock repurchase program that Microsoft's board has approved. We're talking about a $60 billion buyback plan. To put that in perspective, $60 billion could buy you around 40 private islands, or one incredibly overpriced cup of coffee if inflation keeps it up. This mighty buyback program doesn't have an expiration date, meaning Microsoft can flex this muscle whenever it sees fit. Naturally, Wall Street was quick to respond, and Microsoft shares saw a 1.67% boost, landing at $438.54 at last check. The company already had a stash of $75 billion in cash and short-term investments as of June 30th. With quarterly reports expected by the end of October, it seems Microsoft is eager to keep investor confidence rock solid. Adding another layer of intrigue, Microsoft's annual shareholders meeting is scheduled for December 10th, and folks holding shares as of September 30th will be part of these high-stakes discussions. Think of it as a tech-themed early Christmas gathering, where the agenda might color the company's next moves in the AI and cloud sectors. Speaking of AI, it's not just fancy press releases and shareholder gestures that got Microsoft newsworthy today. They've spilled some tete-a-tete tea. Reportedly, Elon Musk and Oracle's Larry Ellison begged Jensen Huang for NVIDIA GPUs over dinner. The scramble for AI power is real, my friends, and Microsoft seems ankle-deep in this riveting chapter of the ongoing AI narrative. Now let's add another element to this roller coaster. Microsoft's AI ambitions continue to soar, with new centers in Abu Dhabi aimed at pushing the boundaries of AI development. Teaming up with G42, a local tech powerhouse, they've invested $1.5 billion. These centers will focus on establishing industry standards and responsible AI practices in the Middle East and further afield. It's like opening up a new Starbucks, but with algorithms instead of lattes, amplifying both their ethical framework and technological footprint. Of course, any forward-thinking Microsoft strategy would be incomplete without some structural tweaks. They've recently moved some revenue lines under the Azure umbrella. Meanwhile, Azure's growth seems to be gearing up, promising exciting quarters ahead, especially as we approach fiscal 2025. And here comes the swan dive. Microsoft's focusing heavy on AI with plans to bolster its competitive edge against magnets like Amazon. Partners like OpenAI, currently eyeing a monster $150 billion valuation, underline Microsoft's resolve to be at the pinnacle of AI innovation. So there you have it. From kickstarting dividends and mouthwatering buyback plans to expansion in AI hubs and strategic upgrades, Microsoft is laying down the gauntlet. Stay tuned, because the tech giant is promising an exhilarating trajectory your portfolio will definitely want to be part of. Okay, tech fans, let's dive into why CrowdStrike is all over the headlines today. First up, we've got a whopper of a legal dilemma. Braunstein, Gewurz & Grossman LLC has announced a class action lawsuit against CrowdStrike. This means any investors who picked up CrowdStrike securities between November 29, 2023 and July 29, 2024 and took a hit now have a shot at some legal payback. The lawsuit alleges that CrowdStrike wasn't completely honest with their investors about the Falcon platform's upgrades. They supposedly skimped on testing, rolled out some glitchy updates, and then outages city. You could imagine a parade of unhappy customers waving torches and pitchforks. According to the complaint, these dodgy practices hurt CrowdStrike's rep and stock prices soared based on this shaky ground. If you've lost big time and are ready for some courtroom drama, you've got until September 30th, 2024 to get your name on the docket. All right, enough courtroom drama, let's move to some positive cyber vibes. CrowdStrike and Zscaler are forming a nerdy power couple, integrating their cyber awesomeness to turbocharge security operations. Their joint venture slaps AI and zero-trust strategies into the mix, making it a less nightmarish landscape for security operations center teams. This partnership is about decluttering the chaos of data streams and security risks so that SOC teams can actually get some decent shut-eye. Imagine Spider-Man teaming up with Iron Man, but in the cybersecurity world, protecting your digital neighborhood from nasty villains. Punit Minocha from Zscaler and Daniel Bernard from CrowdStrike teamed up like two hype men at a tech concert. They emphasized how their partnership would make life easier for IT security teams and bolster defenses against today's threats. With all the buzzwords like AI, zero trust, and automation being thrown around, it looks like this partnership is going to reinvigorate the SOC like someone spiked the punch at a data center dance party. Last but not least, some folks with seriously thick wallets are taking a bullish stance on CrowdStrike. Benzinga's wizard-like options scanner picked up 14 unusual options trades, mostly pushing bullish vibes on CrowdStrike stock. Particularly over the past 3 months, these traders aimed for a price range of $250 to $280 per share. While the options breakdown shows more puts than calls, those calls almost match the puts in invested money, balancing out at $306,950 for calls to $325,290 for puts. This flurry of options activity suggests that the big whales of Wall Street have their eyes closely set on CrowdStrike, expecting something big on the horizon. So whether you're caught in the legal whirlpool, stoked by some new superpowered cybersecurity integrations, or trying to decode the mysterious dance of options trading, it's clear CrowdStrike isn't going under the radar anytime soon. Stay tuned, folks. This cyber thriller has multiple plot twists yet to unfold. Buckle up, tech enthusiasts, because Snowflake Inc. is making waves today. Yes, the data cloud company everyone loves to watch just caught our collective attention for all the right and quirky reasons. So what's the snowball of news rolling down their mountain today? First up, Snowflake found itself on the radar of Zacks.com visitors, like it's having a high school reunion. Everyone's wondering about its future direction after shares took a minus 14.1% plunge this past month. No, it's not going downhill like a ski slope, but it's worth dissecting the factors influencing its near-term performance. Over the last 30 days, Zacks analysts have been revising their earnings estimates faster than you can say cloud data. The consensus is that Snowflake is expected to post earnings of 15 cents per share for the current quarter, but this figure has seen a slight downgrade of minus 4.7%. For the current fiscal year, the earnings estimate dropped by minus 4.5% to 57 per share, signaling a minus 41.8% year-over-year performance. Ouch, am I right? Despite the earnings dip, the sales forecast paints a brighter picture. The consensus estimate for revenue this quarter is $898.34 million, up 22.4% year-over-year. Plus, the last quarter saw revenues hit $868.82 million, outpacing the Zacks consensus estimate by a smidgen and delivering an EPS surprise of plus 20%. Talk about a mixed bag. However, Snowflake isn't just on the gossip circle because of the numbers. Financial bigwigs are diving into their options, showing us how the big money rolls. We've seen 11 unusual trades recently, highlighting a flurry of activity in Monty Python-esque proportions. Throughout these trades, about 45% were bullish, 36% bearish, and significant traders are aiming for a vast price bracket from $70 to $230. Owners of unending faith in Snowflake anticipate prices will waffle around $163. Ah, the stock market, and how it keeps us all entertained. Aside from the stock and options buzz, Snowflake also flaunts over 3,000 customers, including nearly 30% of the Fortune 500. Pretty decent company, wouldn't you say? Their robust data warehousing and sharing capabilities continue to be a hot topic, especially since their cloud solutions can magically pop up across various public cloud environments faster than you can binge watch a series on Netflix. Intriguing stuff. Bottom line, Snowflake seems to be at a juncture. Its revenues are up, while its earnings projections are down. But hey, Wall Street lingo can often be a riddle wrapped in a snowstorm. Investors, analysts, and traders alike are in a state of suspense. Will Snowflake poof back up like a magic trick, or will it hover in these chilly financial winds a bit longer? Only time, data, and a lot of financial jargon will tell. All right, tech fans, let's deep dive into why Intapp is making headlines today. First up, Intapp surged a whopping 6% in its most recent trading session, closing at 47.51 cents. That's quite a jump, especially on impressive trading volume. If we zoom out a bit, the stock has seen a 7.5% gain over the past 4 weeks. Clearly, Intapp is rolling in the green. So why is Intapp crushing it? 2 words, robust growth. The company has seen strong growth in its cloud annual recurring revenue and has been expanding its partnership with the tech behemoth Microsoft. This is a big deal because it sets up Intapp for success in the booming vertical SaaS and AI markets, both of which are hot commodities right now. On the earnings front, hold on to your hats, because Intapp is expected to post some eye-popping numbers. We're talking about projected quarterly earnings of 0.13 per share, marking a 116.7% increase from the same quarter last year. And that's not all. Revenues are expected to come in at $117.9 million, up 16.1% year over year. Numbers like these are bound to catch anyone's attention, right? But wait, there's more. While strong earnings and revenue growth are exciting, trends in earnings estimate revisions can offer more insight into potential stock price movements. For Intapp, the consensus EPS estimate for this quarter has held steady for the past 30 days, so we'll need to stay tuned to see if the recent surge can continue. Besides, Intapp isn't just outperforming in isolation. The company is part of the computer and technology sector, which includes 616 companies and is currently ranked number 7 in the Zacks sector rank. So Intapp's recent stellar performance isn't really an anomaly. In fact, it fits right into the upswing we've seen in the sector, which has been delivering an average return of 20.3% this year. Intapp itself has shined even brighter, posting gains of about 25% year to date. And for all the comparison enthusiasts, Fortinet is another star player in the same sector, enjoying returns of 30.4% since the beginning of the year. Both stocks are currently high flyers in the internet software industry. So, there you have it. Intapp's strong performance, impressive financials, and strategic partnerships put this company in the spotlight. It's definitely one to watch closely as it aims to keep basking in the bullish trend. Now over to you. What do you think about Intapp's recent gains? Do you believe this is a sign of more good things to come, or are you cautious about the hype? Drop your thoughts in the comments below, and let's get this conversation started. All right, friends, let's talk about Microsoft today. With all the juicy bits of news surrounding them, you'd think they were the main character of a tech drama. Given all the action, would I sell, buy, or hold Microsoft stock right now? Drumroll, please. I'd say buy, but let me break it down for you and share why this looks enticing. But remember, always do your own research before making any moves. First off, Microsoft raising its quarterly dividend by 10% is a solid signal of confidence from the company. For dividend investors, this is like a cherry on top of an already delicious sundae. The extra slice of financial pie by December 12th sounds pretty sweet. Then we have this $60 billion stock repurchase plan that doesn't have an expiration date. That's like Microsoft bench pressing on its financial prowess. Share buybacks typically boost shareholder value by reducing the number of outstanding shares, making each share more valuable. The stock also got a little bump, climbing 1.67% and now sitting at $438.54. With quarterly reports due at the end of October, you can feel the suspense like we're waiting for the next big blockbuster movie release. Adding to the mix are Microsoft's ambitious pushes in AI. From reported riveting dinner drama with Elon Musk and Larry Ellison to staking out strategic expansions in Abu Dhabi and beyond, it's clear Microsoft is going in heavy with AI. Teaming up with giants like OpenAI, aiming for a whopping $150 billion valuation, underscores their commitment. Their intermediary moves, like tweaking revenue lines under Azure and ramping up cloud services growth, indicate a strategic fine-tuning that's super promising for future earnings. Long story short, with solid financial moves, shareholder perks, strategic tech investments, and AI ambitions in full throttle, Microsoft is revving up like a V12 engine. Hence, buying some MSFT if you have cash to spare sounds like a worthy move. But hey, always do your own research before diving into investments. Every portfolio and financial situation is unique, and while MSFT looks shiny and promising today, you've got to see if it fits your investment goals and risk tolerance. Happy investing, folks. That's a wrap on today's tech stock roller coaster. Microsoft boosting dividends and orchestrating billion-dollar buyback plans. CrowdStrike mixing legal woes with superpowered cyber partnerships. Snowflake's intriguing financial journey. And Intapp's rapid rise. Tech stocks on the NASDAQ are keeping us glued to our screens. If you enjoyed this deep dive into the tech world today, don't forget to like the video, subscribe to the channel, and share it with your friends. Return tomorrow for another jam-packed update on all things tech. Keep those portfolios sharp and those notifications on.